I want to get off first with leasing. Industrial leasing jumped 42% from 2020 to 2021. It's now down 22%. Why the huge drop off, and how much worse is it going to get?
Well, I would say, first off, U.S. industrial real estate is healthy. 2023 was actually the third best year on record for leasing activity at 790 million square feet. But like you mentioned, it has declined. The second best year on record was 2022, and the best year on record was 2021, where there was over 1 billion square feet. So we've seen some declines, but I think it's important to note that the average leasing pre-pandemic was about 580 million square feet. So to put it in context, industrial real estate was going about 70 miles per hour before the pandemic. It sped up to a frankly unsustainable 120 miles per hour. And now it's going about 90 miles per hour. And that's where the market's settling and really kind of hitting that cruise control button.
But we are seeing vacancies rising now. Is that just a factor of more supply or demand fall off?
It's a combination of both, but most of the supply that's hit the market has come from new development. So because of that massive demand for space, vacancy rates declined to a record low 2.9% in early 2022. So just like anything else, when demand is strong and supply is at record lows, there's going to be supply added to the market. And just like every number we track post-pandemic, the development hit a record in 2023 with over 612 million square feet of completions. The previous record was the previous year at 500 million square feet. So in a 24-month period, close to 1.2 billion square feet of supply was added to the U.S. industrial market. That's nearly equal to the entire Chicago industrial market, which is the largest one in the world. So right now we have vacancy rates at 4.8%. I mean, that's still a low number. That means the market's 95% occupied, and the 10-year average is 4.7%. So we've had this unprecedented amount of space hit the market, and we're just back to what the 10-year average vacancy is.
Well, just to dig in on construction a little bit more, especially in the closer in areas, you know, that was the big place to build because we all need our same day deliveries from Amazon. So construction starts, though, are now down 60% from their peak. I know you said it was a massive boom, but could that present perhaps an opportunity for investors?
I think it could. You know, construction, like you said, starts are down significantly. There was only 46 million square feet of starts in fourth quarter. And we do have about 377 million square feet under construction in the U.S. right now, but over half of it's going to be built in the next 6 months. So we do feel that vacancy rates are going to peak at mid-year and then start to go down again because development is going down quite a bit. We're going to have much less supply hitting the market. And we feel vacancy rates are going to go down for pretty much every quarter for the next 6 quarters through 2025. So from that perspective, we really do not have fear of any kind of oversupply because this drop in development is occurring right now.
And that means the market could then get stronger if you just sit and wait, hold tight for a couple of years, I guess, right?
Yeah, I mean, I don't even think, frankly, that long. Again, we're at a 95% occupancy. We have maybe 1 to 2 more quarters of some small vacancy rate increases. And then the market vacancy will go back down again. But, you know, you're talking about a peak that might be 5.5%. Again, that's still a 94.5% occupancy rate in a market that's 19 billion square feet in size. So, again, you know, the market's healthy. There has been some vacancy added to it, mostly through construction. But that construction is going down